I think basically we like hit the limit of like how long the market can go up or stay stable without Bitcoin going up. And I think we're probably at that limit right now. Basically, I think we need a reset before we start going up again. You need money to start flowing back into BTC. And for that to happen, I think you need Bitcoin to be at like a good value level where people are comfortable buying it.
We're not there yet.
And we're not necessarily there yet.
This episode is brought to you by Kraken Custody. You'll hear more about them later in today's episode. As always, investments in blockchain technology involve risk, terms, and conditions apply.
All right, we're live.
We're live. Welcome back to another 1000X. Today is a great day. Markets are red. Everything has collapsed in on itself, and people are calling yet again for a top after the move has played out. I'm sitting here reminded of what I was jawboning about on the last podcast, which is there's been a divergence. And maybe I was a little bit too quick to hop on it in the beginning. Some people were like, hey, I think you're reading in too much to something tiny happening here, but it seems to be playing out, which is when you got a down day in crypto and an up day in equities, which is what happened last Monday when we recorded. And it's like, man, I don't really like that. Like, I don't like it when you get a divergence like that. If a market is strong, it should have basically every reason to be strong. And it didn't. The equity markets went up. Bitcoin struggled for a little bit. We had some level of movement. We were up like 1% or so, but we couldn't crack that 117 level. And on ETH, the lower high that I pointed out, we sort of went sideways for a bit. And what we're looking at now is we're looking at a solid retracement across the board. We're looking at weakness. I mean, then this is kind of what we were talking about before. It's like if Bitcoin goes down 2%, what are alts going to do? I mean, Solana was a great short at that 250 to 260 level, which we had talked about before. The long from 200, we were looking for 240 to 260. We got to 250, sort of tapped out there, and now it's retraced. And I think we're in retrace and chop mode for now. I think that we're seeing it again today. NASDAQ is up 40 bips and Bitcoin's down almost 3%. That's a sign that we're sort of tapped out on buyers right now. You would think that if people were really interested in buying Bitcoin, then the correlation traders between NASDAQ and BTC and gold is up 1.5% today. It's ripping. Yeah. Well, you would think that with all of that, consider that Bitcoin would be able to go up, and the answer is it hasn't. So I think we've lost momentum. We're in chop mode, and for me, that means buying when we get a significant flush. Like I'm waiting for a nice flush. Maybe we hit 100K, maybe we hit 95. I think 95 would be a little tough to hit, honestly, from right here, because I do think that you get buyers step in a little bit above 100. But alts, I think, can get crushed here. Basically, I think we're in wait and see mode, Jonah. What are you thinking here?
Yeah, I mean, you had a good call last week, and the rest of the stuff that you mentioned outside of crypto last week, Tesla, Hood, basically equities, right? Equities
and commodities. Don't forget my uranium pitch. Which, by the way, uranium is up. Uranium.
How much is URA up in the last week
in the last week since I talked about it is up 14%.
That is ridiculous.
Let's go.
That is ridiculous.
14%, Jonah.
Are you taking any profits or no?
No. This is full on boom town.
It's trading like a shit coin. That's amazing.
Like uranium looks phenomenal right now, and it continues to look phenomenal, and I see no reason to sell it. So,
yeah, I mean, you had some good calls last week. I'll hand it to you and give credit where credit is due. I mean, obviously on just in the world of crypto, there's a lot of panic. Oh my God, we're underperforming equities. Oh my God, it's sold off down to $112,000 from $117,000. The world is ending. I'm a little bit more sober and kind of sanguine about this. I don't really think it's that bad. I think that basically we read, every time we test local highs, people add a bunch of leverage, betting that it's going to break through because, that's a tried and tested strategy in crypto. When it doesn't, people get liquidated like today. And then it cleans the slate for yet another rally. I think we're just in a range bound market, and most of the market is momentum trading, which is, we've seen this a million times. It happened last summer too. It also happened, I guess, just looking at the chart, there were significant portions of last year where we ranged like this for months, and we had the same dialogue where people were euphorically bullish on the highs of a tight range, and like, just absolutely melting with fear at the lows of the range. And I don't think there's anything that meaningful going on. Like, I don't see a reason for capital to just exit crypto, especially with the broader risk asset picture looking so bullish. I mean, if you look at ES1, just the S&P 500, the Sharpe ratio since the April lows, obviously, I'm cherry picking that, but the Sharpe ratio this year is probably above 2. The Sharpe ratio since the April lows is probably above 3. It's just the most amazing investment. It feels like it goes up 3 out of every 4 days. And with that in the background, like, how could you possibly be upset about having money in Bitcoin or, altcoins? I think it's just going to give us some opportunities. I think I agree with what you said. I think there's going to be like, if you had some ideas, some things that you wanted to add to your shopping list, hype, for me, Aerodrome, if the ENA bulls out there, they're vocal. If there are some altcoins that you want to add, like, I feel like altcoins are about to get shellacked pretty hard. I don't think this is over. So maybe you end up getting some of those great buys before we continue roofing. I don't have like a specific short-term thesis on price directionality in crypto. It feels to me like it feels like a fruitless exercise to analyze why the entire space is down or up, other than just looking at leverage. Like, if we pull up Velo data, let me see here, velo.xyz. 1 second. So Velo, I'm sure it's on the Blockworks dashboard too. Yeah, I mean, funding got a little toppy on the highs, and then it just rinsed out. Where's open interest? Yeah, same story. It's off in the last week. It went from I guess 4 days ago, it peaked out total 33 billion of OI. Now we're, down $2 or $3 billion from there just in a couple of days. People are liquidating. It's really just that. And I think there's not much more to analyze than this is a market of momentum traders and it's ranging. So everybody's just getting chopped up. That's kind of my take.
Yeah. And I think you can see this in Solana specifically as well. You knew it was about time to get out once open interest started coming off a decent amount. So basically you had a pretty sizable move in open interest, like at the highs, where when Solana was trading at 230 and going to 248, like that move was entirely predicated by 3 million coins of Solana coming online, which is actually like a sizable amount. And when moves are entirely driven by open interest, you have to start getting a little bit worried.
Yeah.
And so I think basically what I was catching on to last week, and we were just starting to see the beginning of it, is the market has been tapped of buyers at these levels. We've sort of the DAT lost the ability to plow in a meaningful amount of capital. I mean, even the Solana DAT, a lot of that was front run by open interest itself. So I think that, obviously there was real buying, and that's why Solana is higher today than it was 3 weeks ago. But not necessarily the most sustainable buying, because what was happening is kind of reminiscent of 2021. It's the same capital chasing slightly different opportunities. And what do I mean by this? In 2021, what you saw is people would basically, new chains, they would launch their EVM version of themselves, and then they would launch some sort of incentive program to attract capital. And it would kind of go one by one. And so chain 1 would launch an incentive program and all the capital would flood there. And then chain 2 would launch an incentive program. Then all the capital would leave chain 1 to go to chain 2. Then chain 3 would launch an incentive program. Then all the capital would leave chain 2 to go to chain 3. And that's, I think, a little bit of what's happening in crypto with these DATs, is that it's not like the money coming into the Solana DAT is not necessarily new money. It's recycled money from old DATs. It's people that made money in the first DAT sort of rolling their money into the next one. And so obviously that's not the most sustainable thing in the world. And so I think what happens is that even though, when you get this moment when the leader starts to have weakness, it'll bring the rest of the market down. I think the crypto market has shown us over and over and over and over, when altcoins are popping off hard and Bitcoin is not, you get alt season, but you don't last in that alt season for an extended period of time. Like that level of outperformance doesn't last. And I've said in the past, that's probably, anywhere from 2 to 3 weeks, or maybe 3 to 4 weeks max. And so if we look at like how long it took Solana like seriously outperforming Bitcoin, it was a little bit longer this time. It was, about 6 weeks of outperformance. But I think basically we like hit the limit of like how long the market can go up or stay stable without Bitcoin going up. And I think we're probably at that limit right now. So basically, I think we need a reset before we start going up again. You need money to start flowing back into BTC. And for that to happen, I think you need Bitcoin to be at like a good value level where people are comfortable buying it.
We're not there yet.
And we're not necessarily there yet.
So it does feel like we could get a pretty significant flush.
Correct. That's my take. So like if I'm you and I'm trading, like I said last week, I would now hopefully you sized down a little bit last week and you got more on the sidelines, and maybe you were a little bit more concentrated in some of the better stuff. Like maybe you took on that BNB long that we were talking about that did pretty well. But I wouldn't be rushing in right now. If you're fully allocated, I would cut a little bit. If you got out last week, you did a great job. Continue to stay out, I think, for a little bit. If you really want, you can nibble on some of the stuff that's been like really nuked if you like it. Like maybe you want to buy a little bit of Arrow. Maybe you can get back. I think actually the BNB could be another interesting thing here, just because it's been so strong. But basically, I would be waiting here. Like this is a time to be patient.
Yeah, I mean, I guess when I always like to buy Bitcoin, so buying dips is always easier to conceptualize when it's denominated in BTC. I'm always like, oh yeah, sure, 112, why not? But then when I think the real test of sentiment is like, would I buy alts here? Like, how does that feel? How does that feel in my gut? And right now, I wouldn't want to catch the falling knife in any of these alts.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming chartered special purpose depository institution. And deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. Kicking off for its season 2 in September, Peaq's Get Real is Web3's first campaign rewarding people with tokens for creating real-world value. With a total prize pool of 5% of Peaq tokens' initial supply, Get Real follows a simple formula. Connect your devices, create value, score points. The quests can include such things as driving around with a Web3 Navigator app, measuring local noise pollution, or running an AI agent in your browser. Further down the road, you can get a unique, customizable NFT designed by the agency behind the recent Call of Duty rebranding. An NFT that will evolve as you make real-world impact. Follow Peaq on X to find out more. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Well, I guess it depends on like your alt, right? You like one alt that looks really good right now, which has been doing very well, is ASTER. Have you been paying attention to this?
Yeah, and we should talk about that. Quick one. Like, I've obviously missed ASTER for the same reason I missed Hyperliquid, despite having analyzed them both. Like, I still don't have a good mental framework for understanding why the world needs another exchange. I still can't wrap my head around it. Call me dumb, call me a boomer. I just don't get it. So I'm okay missing some of these trades at the earliest possible phases. Why does the world need another perp DEX right now? Other than like, oh, it's CZ sponsored and they're the right KOLs around this. And oh, look, other people are making money and screenshotting their wallets and posting it online. What's the actual reason why this should sustain the way that Hype did?
I mean, the thing that people sometimes forget, and this is no shade to Hyperliquid, right, is that perp DEXs actually have a long history. And if you go back 4 years ago, everyone was talking about how GMX was going to win. Like it was absolutely going to win. Now, with that being said, no perp DEX has gotten to the size of Hyperliquid, and Hyperliquid's team is extremely competent, and they're very good at what they do. And basically, no other perp DEX has been able to even come close to what they've accomplished. But history has shown that it's possible to very easily steal away users if you provide similar levels of liquidity, similar level of product, and a similar level of experience to the DEX itself, right? I mean, it's very easy to click withdraw and then deposit. It takes 15 seconds to get off of Hyperliquid and go somewhere else. Okay, maybe not 15 seconds because you have to wait for to bridge off Arbitrum, but it doesn't take more than half an hour, and it doesn't take more than 15 seconds of like active clicking to get off. So it's not, it's not particularly hard, is what I'm saying. And so when you have something like ASTER come out, I think immediately it has to be like your bells have to go off in your head. It's like, okay, well, if this product is backed by the number one exchange in the world by CZ, then it's probably going to have a moment in the sun. Now, I have seen a lot of most of the time, what happens when this gets out there is that it has its moment in the sun and then it sort of just dies off. Like it has a trade. There's a trade there, and the trade is probably like a month-long trade. It's the initial run up, and then the sell off, and then the secondary run up for everybody that missed the initial run up, and then the thing actually doesn't end up getting any traction or any usage, and then it sort of just dies.
Yeah,
that's kind of my take on what's going to happen here. Like, but the alarm bell.
As in, you think ASTER is going to have its moment in the sun and flare and then flame out? Yeah,
but I think it operates in an area that it's like, it's possible, right? It's like, as long as it's possible for it to steal some market share, I think it's a good trade. And so actually, like right now, so basically traded up immensely, very, very quickly. And it's had from the highs, it have a 35% pullback from the highs. And so it's like, is it ready for round two? I'm watching it. Like I think that there is a round two trade here, basically to take it as everyone else is I think a lot of people miss that trade, so I'm kind of watching it. I'd probably nibble around $1. Like if we get a more significant pullback, I'd probably buy it like $1 and try to sell it at 2 again.
I don't know about doing trades like that.
Trade.
Maybe it works for you, but I wouldn't recommend doing that for most people. And the reason why is like, you just look at Trump coin, right? At current valuations, ASTER, I don't know what their revenues are, but whatever they are, there's not a statistically significant sample size of ASTER revenues to justify the 2.4 billion FTV or wherever it's trading right now. So you're basically buying it on vibes if you buy it. It's trading 140. If it goes to 1 and you buy it for a pop up to 2, you're buying it based on vibes. You're buying it based on technicals. You're buying a chart. You're not buying a project's actual fundamentals. So, you know, again, Avi, like you've got enough experience doing this and probably a good enough gut feel for crypto that may work for you. But I would not recommend doing that for most people. And I certainly won't be doing it myself because to me, this is just another example of Trump coin, right? This is a project whose token is, as of right this moment, unlinked to anything real. It's more of a meme coin than a hyperliquid like vehicle that buys back tokens with business revenues. And sure, it may become that one day, but it isn't yet. And even if they announce that they will, they only have a couple of days worth of, you know, being live to demonstrate. So for me, like watching what happened to Trump coin, I don't know. There is no way to value this thing. And so I think it's important to avoid FOMO or chart trading.
Yes. I mean, don't get one-shotted by this idea of revenue, Jonah. There's still good trades out there.
But like, why one? Why two? To me, these are not objective frameworks. And yes, I agree. It's not just revenue that matters. I'm perfectly happy to invest in things on vibes and memes and just, you know, YOLO in and out of stuff. But this thing's been around for like a day. The last time we saw a meteoric.
That's exactly why I get like I like to look at the new things for trades, is because it's been around for a day and because it moved so quickly, so fast. A lot of people ended up on the sidelines, and I think that like it becomes a good trading asset, right? Like I think that's where maybe we differ, is like that actually makes it a good trading asset to me. But you know, look, I'm definitely on your side. I think that, like, okay, so if you go to the website itself, I don't know if anyone's actually gone to the website other than just like trading the coin. It's not a particularly good asset. Not a particularly good web page. That was insane, by the way. I wish I could share my screen right now so people know I'm not like joking about this. Hold on, I'm gonna share my screen.
I mean, look, the annualized volatility.
Jonah, you got to see this. Look at this.
I can't wait to see this.
Hold on. Oh, I can't share. So as we're talking about this, somebody just texted me, "Have you heard of ASTER?"
We can hear. I know somebody texted you because we can hear your text messages in the background. You're like an old man. My mom turns the text message ringer on.
Yeah. Otherwise, I wouldn't say. But that's crazy. Like somebody literally just texted me about this. Which I'm going to just go back to the point of when you get an asset that comes out and it rips really hard and nobody gets in, it does generate FOMO on the pullbacks, and you can sometimes take trades out. That's all I'm saying.
That's a good trade.
But if you actually like look at the website and the app itself, it's kind of shit. And also, like, it just doesn't really make sense. Just like tremendous amount of wash trading has to be happening on this platform because it says it has 258 million bucks of open interest.
Yours, no way, unless it's all CZ. But
and it says it has $532 billion of total trading volume. Jonah, what is that ratio?
No way.
Like, what is that ratio? It's not. No. It's not that ratio makes no sense. It's potential fraud. I mean that's crazy. That's
what else could it be?
Like that sets up my antennas.
That's got to be the highest turnover in the history of any exchange launch ever, if it's real. I honestly, where I'm at with this is all that crypto Twitter is picking up on.
Let's just for comparison's sake, let's go to Hyperliquid.
Yeah.
Today on $4.8 billion on $3.8 billion of open interest, they have $4.8 billion of volume on Bitcoin. On ASTER, they have 236 million of open interest on Bitcoin, which is not actually, it's actually more than what they said that they have on their homepage, but let's put that aside for a second. $2.2 billion of 24-hour volume. So they have literally a 20th of the open interest, but half of the volume. That doesn't make any sense.
No, it doesn't. This is like the trading opportunities that you mentioned, Avi, are just, it has nothing to do with the fact that this is a DEX, a club. There's nothing special about this. There's nothing uniquely valuable here. It is just an insanely volatile asset. It went up. It just created a lot of wealth over an extremely short period of time. So if you go and annualize that volatility, it's so freaking insane that it attracts retail traders. To me, that is it. There's also a CZ story behind it too. And everybody loves the mythology of the hero who's just returned from his exile to save humanity from the forces that want to extinguish crypto. So like there's definitely a CZ meta here. And maybe you can profit from the high amplitude of this thing. Like if it trades down another 50%, you just compare where it started to where it peaked out. And yes, it seems like there's probably a range trade opportunity to buy the dip on. Like the reason why I hate these trades though is because they can nuke you so badly. Like people who invested in Trump on a similar volatility thesis, a lot of them ended up losing 60 to 90% of their money in very short order. So I think this is just I think what's underrated in this market is the ability to just maintain your patience and your calm and your vision for your portfolio and not get to me, this is the ultimate shiny object that distracts you out of good long-term positions. And I'm more of a long-term trader, so I don't like things like this. This bothers me. Another thing that bothers me is that on their website, next to the section that says perpetual, there's a section that says 1001x. Like, why 1001x? Why not 1000x? They're trying to copy us, Avi? What are these people doing? So basically, you're on mute.
They're trying to one-up us, Jonah.
Trying to one-up us. Why not? They should have put 999x on there just to be respectful. Yeah. Have some respect.
Our moves.
This is a shiny object. The logo is a logo of a shiny object. I bet we won't be talking about ASTER in 6 months. How many exchanges are in the graveyard? That's what made Hyperliquid so hard. It was obviously a good product. I missed the no KYC, but like how many exchanges are in the graveyard? Do you remember back in 2021 how many exchanges there were? It was like more than 100, I think. It was crazy.
It was a lot.
I want to see some new ideas in crypto, not just more exchanges and more copycat versions of previous products.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming-chartered special-purpose depository institution, and deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. Kicking off for its season 2 in September, Peaq's Get Real is Web3's first campaign rewarding people with tokens for creating real-world value. With a total prize pool of 5% of Peaq tokens' initial supply, Get Real follows a simple formula. Connect your devices, create value, score points. The quests can include such things as driving around with a Web3 Navigator app, measuring local noise pollution, or running an AI agent in your browser. Further down the road, you can get a unique, customizable NFT designed by the agency behind the recent Call of Duty rebranding. An NFT that will evolve as you make real-world impact. Follow Peaq on X to find out more. Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Maybe we'll do a segment next week on all the new stuff. I'll put out some feelers to figure out what else is being built right now. I mean, one thing that is absolutely all the hype are the new stablecoin products that are coming out. You have Stable and Plasma, and Maple is generating a decent amount of hype off of this too. I don't know if you saw their pool that got filled, their Syrup USD pool.
I didn't.
That got filled in like 30 seconds. It was like $200 million worth or something like that. But basically, I think like stable coins are going through what I would call a renaissance right now, and I think that they're absolute catnip for TradFi investors. In the same way that Ripple is catnip for a TradFi investor, which is why, like, I really like the idea of Plasma doing very well over the coming few months, because I think once it goes live and once it's across more different exchanges, because right now you can only trade it on Hyperliquid because it's not actually launched yet. I think it's going to do extremely well, because I think that people in TradFi are probably going to try to pile into this thing.
You bring up a really interesting point, which is the catnip for TradFi investors. That's what the market's telling you is where you should put your money. You should put your money in front of or alongside TradFi. You should not put your money in things that TradFi won't touch, like ASTER. And let me give you an example. Let me give you a concrete example. Galaxy stock.
When are you going to stop coming at me for this ASTER take? I just said trade it.
Look, I'm
fucking with you.
I respect your opinion. I might differ humbly and respectfully on ASTER. I think that is a nuclear cesspit of just with a gigantic avoid sign with a nuclear logo in yellow and black next to it. But anyway, you might be right. If they're good, if you've had success trading short-term charts out there with insane volatility, do it. It's not my thing. It's an obvious thing. But like Galaxy, just to give you guys a concrete example of TradFi catnip, it used to be that when Bitcoin was down 1%, Galaxy was down like 6% because it was on the random Toronto stock exchange, and it was just like basically a beta play to crypto. It was Mike Novogratz's Bitcoin, but IPO'd in Canada. And it was, in 2021, crypto things with businessy looking tendrils attached to them would get like a huge multiple. And then in 2022, they would get like a discount. So Galaxy was just this massive volatile beta to Bitcoin thing. Now, today, Bitcoin's down 2.5%. Galaxy's down 43 basis points. Like, it's actually like the crypto equities with crypto adjacent themes, or better yet, AI, like what Galaxy has with their data centers. To me, that's a place where you can buy, like if Galaxy were to really nuke right now on crypto just selling off as liquidations occur, Galaxy is something that the relative price action is telling you will outperform on the upswing, because of just who's trading it, right? Then there's another, I'm sure XRP will, when it IPOs, will probably trade the same way, or Ripple equity rather. So I think the market's telling you, just in that one little example that I just gave, it's telling you everything you need to know about where the fresh dollars are coming from, and it's not coming from the strung out people in our world. It's coming from these like new TradFi investors who are backstopping stablecoin equity, backstopping Galaxy, even while like XRP is down 4%, Hype is down 5%, ETH is down 6%. It's crypto equities where it's at right now. Weirdly enough, maybe we'll get a crypto equities season.
Yeah, I mean, it's definitely one thing that haunts me, Jonah, is at like the bottom of the market post FTX, like the substantial amount of my capital into miners and GBTC, and I sold it all for like a 2x, and all of these miners have like 10x since then, and I'm like, wow, I would have been so rich if I had just kept kept those positions in.
Many such cases.
Yeah, crypto equities in general, I think are going to do very well over the coming months, because of what you just outlined, which is why I put a flyer on on Nakamoto, which just absolutely collapsed. I think mostly because of mismanagement and just huge amounts of shares hitting the market, and inability to raise capital and like plow it in. But Nakamoto, for those that don't know, was the David Bailey DAT. It's trading below NAV, and I think this is the first quote unquote implosion of a DAT that we've seen. And Jonah, if you remember, we were talking about these being good pickups if they get to like reasonable discounts to NAV. And right now, this one's at about a 35% discount to NAV, and it's trading very close. So the insider price was 112, and they're still locked up. It's trading at 133 right now, so it's like pretty close to the insider price, which makes me think that we could be due for like a nice little short squeeze or a nice little bounce. But basically, I think in this pullback, we're probably going to get more of this stuff, and worthwhile looking out for. One thing that I have found kind of interesting though is that it really does depend. Like the competency of the people running the DATs really do depend. Like it really does. Performance really does depend on that. Is what I was trying to say. So like something like BMNR, for example, so Bitmine, Tom Lee's thing, has not seen that massive collapse in the same way that Nakamoto did. I think it's sort of like inevitable that it will at some point, and that'll be an even better buy than Nakamoto because it's actually run well. But we're starting to see. I love it when we plan out a trade like months in advance, and then it starts to give you opportunities to get in. It's like, okay, well, I know what I'm getting into now.
Yeah, you just lie in wait. Where are you getting the insider price for Nakamoto? That would be an interesting thing for the listeners to maybe hear and do some research on themselves. Like you said, the insider entry point was 112.
I got that number from somebody that did the deal.
Okay. I was going to say I was unaware of any public repository of that data, but that's pretty cool. So I think there's basically the trade is pick the DATs that aren't going to be missing coupon payments and forced to sell crypto when they trade to a discount, and then buy them and hope they have the staying power to ride it out back to par. Again, like you said, you have to assess the teams, you have to assess the financials. That's real equity analysis, but I'm sure hawk-eyed listeners can probably do that. Some of them can, and maybe post their analysis on Twitter after they've gotten their positions. I think that's probably something to look out for. One other thing that's kind of on my radar right now, just in broader crypto, is doing that with Hyperliquid if I can. Like I think if this alt sell-off becomes really acute, I think we may get another April-like opportunity to scoop that thing. I really like everything is shanking much harder than I expected in altcoin space. Even Pump might be another great one to do that on. You know, Hype and Pump are these two just amazing money machines, and it's fine not to be early as long as you lie in wait when shit really hits the fan, like it looks like it's about to. So yeah, I think that's probably the reason to have less than 100% of your portfolio allocated, is just so that you have dry powder to buy these dips, not because timing a short trade is going to work particularly well. I don't know how long. I wouldn't feel comfortable being short for more than a few days at this point, because it does feel like a liquidation trade, not like a structural repricing lower of crypto for some meaningful, bigger reason, like what we saw during the Elizabeth Warren era or FTX or Luna. Do you think that crime season, which does kind of seem to be making a comeback here, will actually reprice crypto lower? Is there any risk of that? Like if this, we're not calling ASTER a scam or anything, but if the fishy smelling projects continue to smell fishier, will we end up in a scenario like we saw in May of 2022, when Luna did just so much damage to the price of so many projects as people realized that it was a house of cards? Do you think there's any risk of that at this point?
No, I mean, I don't think so unless like something truly horrendous happens. Like for example, a project just like fully exit scamming or rug. I just don't see it as an existential risk until the next until we get a Democratic administration, which hopefully won't be for a while. But where I thought you were going with this is crime season making like is crime season going to continue? And my answer is yes, hugely. And there are ways to make money off of when Trump, like if the US government is going to do something involved with a stock, they're going to make sure this thing goes up. And so like the initial reaction to Intel, the 10% stake, I don't think factored in the fact that Trump was going to probably broker some other deals. Like good stuff was coming for this stock. And so I think what your takeaway from this can be is if the US government is involved with a stock, it could do like you can read into that and think to yourself, okay, maybe this thing is going to do pretty well. So for example, one thing that I did, which I got lucky about, but then I doubled down on this morning, is Tesla. So I told you guys that I bought Tesla a little bit ago. I bought a lot more this morning, specifically because there was that shot of Elon Musk and Trump sitting together and Trump saying, "I miss you."
The lip reader.
Yeah. And what you can see it's pretty clear. And you're just like, okay, well, clearly Trump and Elon are back on good terms. Probably going to be good for the stock, right? Like, I don't know what exactly is going to happen there, but I think it's like over the next 6 months, it's probably going to be good for Tesla stock. And I don't think the market's going to crash anytime soon. So Tesla can probably outperform. So it's like, you're basically looking for like who's most likely to benefit, like what stocks are most likely to benefit. And that I think is going to be a big part of trading moving forward. And Bitcoin is part of this, which is why I think that there's a little bit of a floor, is that Trump has staked his reputation in some way on crypto. And so there is some floor level on Bitcoin where crime will take place and Bitcoin will go up again.
Yeah, I mean, he did.
My take on it.
When he got elected, he was tweeting like, "You're welcome, Bitcoiners. See, this is what happens when you put your chips in my corner, like I deliver." So yeah, I do think that he'll probably like accumulate some Bitcoin if it goes too low or backstop it somehow. His kids are all in on crypto. To me, the corruption is just so palpable. Crime season is really the meta right now, and I think that it like other ways to profit from it are probably yeah, it's all just dip buying, isn't it, Avi? I mean, there's basically like, I think the best ways to play crime season are BNB, because I do think that if there's let's say that perps become legal in the US, it does feel like Binance is going to be the primary beneficiary. Hype to some extent as well, but the KYC thing may block them from achieving the same kind of success from that catalyst. I also think that Ripple is a crime season trade. Like Ripple in and of itself is a totally useless company that just sells XRP, but that business will become better as crime season progresses into the later innings. Galaxy. There's like, I'm literally just kind of word vomiting or like brainstorming what to accumulate on this dip. And it's all, I guess the hardest part is going to be timing it. It hasn't dipped hard enough yet that it feels like
it's like this is the first move. I think just as a general, like as a general trading heuristic, you don't really want to fade the first move. And what do I mean by this? I mean, you can think about this on on a weekly time frame or a daily time frame, I'm thinking about this specifically on a daily time frame. But for example, we've basically been going sideways for a week. Thursday to like 10. There's been 10 days of sideways so far, and today we got like a reasonable 3% move down after ranging for 10 days, and you tend to not want to fade those substantial moves after you've been ranging for a while, right?
Yeah.
Like wait to see how the day closes. But the other thing is that we've now solidified that 117 level as a good stop out level. And the way that Bitcoin trades, especially like level to level, is people look for symmetry in trades and they look for asymmetry in trades. So for example, at 117, it was like pretty equidistant to the highs of 124 as it was to the lows of 107. It was like reasonable, basically like a 50-50, which is why you ranged there for a while. There was no like easy stop out or stop in. There's no asymmetry there. It was like a pretty symmetrical price level. Now you have a very easy stop out above 117, and you can easily target the lows here, and I think that makes it like a much better trade to sell here than it was to sell before. So I'm of the mindset that momentum traders are now, especially because of this new lower high, they're going to try to get out, and you need the value buyers to come in, and I don't think the value buyers come in until at least 100K.
Yeah, I mean, just another way of looking at symmetry is throughout time, right? So you could compare this sell-off that feels like it's just getting started to the sell-off that happened in April on the tariffs, and then ask yourself, like, okay, so these two sell-offs could be symmetric because you have a similar group of players, you have a similar leverage backdrop, a similar, average entry price now versus then. Not a whole lot has happened since April, so it's kind of the same setup, but like, all right, let's just do a little measuring on TradingView. Peak to trough from, let's call it January to the pits of Liberation Day Peaq in Bitcoin was 30%. And then
I don't think we're going to get anywhere close to that.
Yeah, me neither. I'm just saying, like, what feels like the right fraction of that sell-off for this move, which is not being driven by like an exogenous potential recession event and more just a liquidation, maybe 20% maximum, right?
Yeah,
So,
I would say 20%. That puts you at about 100K. I mean,
yes.
I think 100 to 105 is a great buy, and I'm probably buying alts on that dip.
Yeah, so a 20% sell-off from the absolute tippy top is $99,000 a token. So to me, if you trade down there, then we're going to be having the same conversation we had in April, which is just like, close your eyes, don't be a coward, and buy. But here at 112K, it's not close enough to start, putting it all out there on the table.
For sure.
That's kind of how I would value this. Just be like, okay, what happened in April? There was a real catalyst then. Now there's no catalyst. So max 2/3 of that sell-off is appropriate, but probably more like half of it. So 15% peak to trough. And 15%, just for your reference, peak to trough would be, where is it? What is it? 105K in Bitcoin. Probably a good way of looking at it.
So I think that's good, Jonas. So I'll see you at 105K.
See you at 105K, Avi. We'll be loading up the gun in the meantime and coming up with a shopping list.
Yeah. In the meantime, stay healthy.
You too. Shana Tova, Avi.
Shana Tova.
Happy New Year.
Happy New Year to everyone out there that celebrates. It was great talking to you, Jonah, as always.
Likewise. See you next week. Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.